Andrew Thompson from Precision Market Trading. I thought today we'd look at the banks. The banks have been bashed the last few weeks, capital raisings and whatnot, and it's driven the whole general market down even more so than the resource stocks. But everyone has a great interest in what the banks are doing, and where the banks go, the general market goes too. So we thought we'd have a look this morning. The first one is a weekly of ANZ, and you can see we've had quite a serious correction down here from all-time top, but I have good reason to believe this is a low of significance. So basically we've gone all the way back to the GFC low back in early 2009 to this week's low, and you'll find that the range between these 2 points, 1183 up to this low at 2940. Don't forget 1183 is that number I've talked about, that the old futures low back in 1991, the first Gulf War, and 1183 to 88, 89 comes up a lot in this market. So the range between that low and this low, $17.57, and the big low on the way up from this major low was 17.63. So I've got the range in dollars and cents coming out to where the major price low here was in dollars and cents. So this gives me a lot of confidence that this low is something we should be looking at. So we'll focus on a bit closer to the daily. This is a daily going back for the last 2.5, 3 years, and I like a lot of the stuff here. Once again, we got this major low we had back in August 2011 up to the recent low, and the range is $11.77 low to low, and from the subsequent top after that low in time, in degrees, is 1177 degrees. So we've got a fair bit of equality here. Then we come in even closer. We've got this low, this big spike top we had, which at that point was its all-time high. It's $7.76, and then from that low to the recent low, we've got $777 solar degrees. So the price was giving you time going forward. And then from the same low going to the all-time top up here, we had 655 degrees. And from the top there down to this low gave me 652 days. So if you look at this in a geometric sense, that time frame and that time frame is giving this time frame and that time frame. So basically this is all equal. This is like a bent out square. But what I'm saying is all this time is focusing into this low as something to look at. Also the range down from this top into this low was $7.85. Pretty close to $7.77, $7.78, but you know, I don't want to stretch it too far. But if you take the difference between the days and degrees, and I've talked about the averages quite a bit, that comes out at 785. So my price coming down is giving me all the time going into this low. So I'm very happy with this low. I'm happy to buy ANZ around these levels. It's been way oversold. It's due for a good solid rally. I'll have another quick look at NAB. Once again, NAB has been beaten up, but not as much as ANZ. Unlike ANZ, which has been making higher tops and higher bottoms, NAB is holding the lows at the moment. So NAB is in a stronger position. So once again, we go back to the major low we back in GFC in 2009, and we go all the way to the recent top, which was $23.52. Yeah, $23.52. Then we go from the same low across to the recent low, and I've got 22,346. So basically 6 cents out in it's long 6 years. So that's close enough for me. So here I've got the price giving me the time, and then the big spike top we had up after the GFC low, which is a massive great run if you were long. From there to the recent low was 1,468 trading days, and then from the August 2011 low after this top is 1,464 calendars. Now you've heard me talk about many times about how I love seeing calendars and degrees coming out as traders. As I said the other day, that's my bread and butter. So this is a strong time at this low for me. And coming in a very shorter period of time, we have from this top down here 448 trading days, and from this low into there is $4.45. Sorry, it's $4.45. So once again, time is giving me price. traders coming out as calendars, days coming out as range, all adding up to here. So between the two of them, ANZ and NAB, for me, I think these are a reasonably low risk buy. This is a real inflection point in the market. Everything's looking grim around the world. Well, that's what makes lows. It doesn't make easy trading. If you want to be a trader, if you want to make some good money with lower risk, you've got to trade around these inflection points. Whereas if you're wrong, your risk is minimal because you're getting in within 1 to 2 days at the most of the turn point. So I'm liking ANZ and I'm liking NAB. So goodbye for now. I'm going to do another video on the weekend on the XAO. It's some great numbers at yesterday's low. So we'll see how we go. Goodbye for now.